Hey everyone, it is Jack here from Trading Matrix. I hope you're very well. Some of you will know me and some of you won't if you haven't seen one of my videos before. Hello to you. Profiling today a Dow Jones Index Intraday trade that we took on Tuesday, 28th of May. Time frame rolled and held for an extra day. So I'm going to walk you through the steps we went through, why we liked it, why we were trading this name, and some of the best aspects of Chuck's method and how we brought all that together to have a 12-hour winning trade, a really, really good one. First of all, the Dow is looking like the weakest of the US indices, with NASDAQ at the time threatening to make new all-time highs, the S&P holding up well. However, the Dow was definitely looking the softest and the soggiest. It's also been coming under pressure with the stubbornness of US rates, particularly the shorter end of the US fixed income curve, looking like inflation is staying stubbornly sticky, and the Dow is most sensitive to higher rates, so market repricing expectations, and that has been harming the value of the Dow. So we came in on Tuesday after the US holiday. Quick note actually before I go on, these are our internal charts. They're going to look pretty crazy to the untrained eye. There's a lot going on in this video. I'm not going to be able to go through everything that we're looking at. So I'm just going to talk through at a high level and try and explain some of the key concepts. The biggest, I'd say, or one of the biggest advantages of Chuck's method is the combination of multi-time frame analysis and then hunting for confluence in strong zones on different times. So you're looking at the market through different lenses over different time periods, and ultimately one of the keys to getting the big R winning trades is to be able to line things up on many time frames and get in with a tight stop on lower time frames at a point which you believe is going to hold and you have high conviction is going to hold. That way you can shoot for much larger moves because you're supported by the higher time frames. And in order to do that, you want to get in an optimal location. Obviously, none of this works 100% of the time, and you don't need it to. So we came in on Tuesday morning, and like I said, the Dow was looking soggy. On the left, we have our weekly time frame chart, and on the right, the daily, looking at the 28th here. I'm going to bring up my intraday chart. Please excuse some of the squiggles. We're making this from a couple of days after, so it does look a little squiggly. We had the market just going into the start of the US session looking pretty soft, and it continued to stay soft and framed a zone overlapping a value area. We sold very near VWAP on an intraday time period in a zone we call, on a time frame we call the ID2. It's kind of the second level down of the intraday time frames we look at, overlapping this VWAP on the intraday one chart, figuring that this VWAP was likely to hold given all the factors that I've just gone through. We sold at 39 and 25 points with a stop above the highs, 30 points higher. I peeled a few, so that's to say I covered some of the lots that I sold down in the overlapping inner buys. I thought that there was a chance the market might oscillate up, so I wanted to take some risk off the table. This was at about 2R. However, we rebroke down and I was quick to resell because I figured that if this level broke again, the market would be off to the races and we'd sell off pretty deeply. Looking on the left, there we go. And this is exactly what happens. It fell faster than I had anticipated, but we remained short throughout all of this. We've got another 200-point retracement lower. And then coming in towards the cash close, there was strong waves of buying coming in. Now, because we got in early in the day with a tight stop, which we had not moved, the stop still being up above this level, up at 39.55. We never threatened the original stop. We didn't see, while this wave of buying was a little concerning and gave back quite a lot in paper profits, nevertheless, we weren't too concerned about it. And particularly going into the cash close, seeing this zone holding here, overlapping the daily breakout point. So we reduced the trade size down to half in order to roll it up to the daily, cash in some profits. But nevertheless, given the bearishness of the daily time frame and above, we really wanted to stay short. Arguably could have held more of the trade than just the half. However, we wanted to psychologically smooth things, and holding the overnight risk, we felt we wanted to just take half off the table. Obviously would have got a much larger winner had we not done so, but nevertheless, we felt comfortable as a team. Given the internal portfolio dynamics that we'd experienced that day, we wanted to take half off, cash in half, and keep half. So we rolled it up to the daily. Let me just change the charts we're looking at. So coming in here on the 29th, in the overnight session, got a continued sell-off, bigger than I'd thought would happen. I did expect the continued sell-off, as I mentioned. However, it was quite a lot larger. In fact, it was going into the cash open. I think it was like a 300-point sell-off, consolidated sideways for much of the day. And ultimately, going into the cash close again, had a very substantial continuation of the sell-off, and we covered at the daily breakout point. This is something we label for to put it in simple terms, if you get a move around 2 daily ATRs on the day, that's a point at which it's prudent to either trim or potentially close, because the market has moved a very long way very quickly and could be vulnerable to a snapback higher. And indeed, we decided to cover the whole lot. So the second half of the trade down at 38,375. So all in all, we took a 12-hour winner. Looking at it on the daily chart, we sold up in here with a tight stop and rode, at the very least half all the way down and some more down on the first day too, to accrue that 12-hour winner. Might, like I said, be a little confusing looking at this for the first time. But the key point I want to get across is the value of the multi-time frame analysis and finding multiple overlapping strong zones and being able to trade those. And that's what opens the door for trading on a 30-point stop and realizing what a 600 odd point move. And the market has continued to sell off. We're very happy with this one. So I hope that's clear. If it's not, maybe have another watch of it. I hope you enjoyed. Wishing you a very pleasant day and see you soon.